So I wanted to talk about TNX, the 10-year yield. Um, I was going back over this. People are only charting SPY and VIX. Can you believe this? Um, VIX rot, so the charts are screwed up. I mean, we've got a lot of data on the 10-year here. We can go all the way back. Look at those two little hammers right there, predicting that we were going to really run. This is back in the early 80s, right around 1980. So we were dealing with inflation then after the Vietnam War. That spilled over to the Carter administration. They didn't do anything, and then it was spilt over to the Reagan administration. The Fed too wasn't doing anything. The Fed that was in with Carter, they fired him and got Volcker. The pictures of this guy are hilarious. He's always smoking cigars and clouds of smoke. They would all smoke during the Fed meetings back then, which is pretty funny. Anyways, the Fed rate, the 10-year went up to 15, almost 16%. If you locked in long-term bonds right there, I mean, you were banking. Equities really went because after that, it was an easy ballpark. I mean, it was a home run if you bought long-term bonds at this point because face value's down. I'm going to show you this in a second here. Equities also soared right after this, and then they got inflation to the fours, and it remained in the fours basically, danced all around until the 2008 crash. It's kind of interesting going over these charts, you know. Then we've got another tick up right here. Where was it? 1985. There's the tick up right there. We had Black Monday. I don't think that had anything to do with it, but we did hike interest rates over here. Dot-com bubble burst, 9/11, lowered interest rates, which led to the derivatives being created. Things were going nuts. Hiked interest rates. 2008 crash happened. I know the story since I've been trading. I don't know if you guys remember when the stock market crashed back in 2018 when Powell said we're going to hike rates for 4 consecutive quarters. This time, you know, we're in November now, November 2018. It was atrocious. All you had to do was buy a put. It just vertically went down. They pivoted, turned around, and immediately cut interest rates and sent us soaring. 2019 was my favorite trading year. It was better than 2020. 2020 was better for other reasons than it was 2019. But options trading, 2019 was my year. Cut interest rates, stock market exploded. Then we really cut interest rates, right? And during COVID, what happened to the stock market after that? Ripped and peaked in 2021. The 10 years started to price in what was to come. Well, obviously, we can't have rates at basically nothing forever. You know, look what the 10-year was at. It hit 0.42. That's insane. It was hovering around, you know, a half a point. It started ripping in anticipation. Then they announced, yes, we're going to hike interest rates. What happened? It started to take off. And it took off into 2022. What happened in 2022? Look at September. This is September of 2022 right here on this candle. The stock market got toasted. It got rocked in 2022. Companies did share buybacks, which didn't. So equities really increased a lot in 2023 and have taken off since we're nearing the end of the Fed cycle. It's not going to wait till the Fed cuts interest rates. It's going to price it in before it happens. This is what a lot of people didn't understand during COVID. I don't understand. Supply chains are down. Why is the market going up? Well, the market's going up not because of what's happening now. The market doesn't run on what's happening now. It's going to be running on what's going to be happening in the future, right? If there's something causing it to be down, the second it sees a light at the end of the tunnel, it prices that in and it runs. That's what people didn't understand during COVID. That's what people aren't understanding right now. Although a lot of the growth that we had in 2023 was on share buybacks. I don't like that. Not necessarily on growth, although a lot of companies have had a lot of really good earnings. Right? A lot of that's due to inflation. They can get away with more stuff, pricing things way above what they normally could. Right? You can get away with pricing things way too much. Look, take a look at this resistance over here. We're at basically 2006 resistance, right? 2007 resistance. What happened then? Look at that shooting star right there. This is right before the '08 crash when they were hiking interest rates. Anyways, we pretty much hit that level, right? Five-ish. We got right up to 5. We kissed 5, and this candle peeled over. Let's take a look at it on a lower time frame. and we started to pull back. What's happened? Look at this one candle on the weekly here. Let's take a look at SPY. Well, how about that? The 10-year ticked down. The S&P ticked up. Let's go ahead and take a look at the US dollar. By the way, guys, look at this trend line. Right? This is on the weekly. How beautiful is this? I called it. Look up Z-Trade's Twitter. I called the bottom right there. It was easy. And people bought puts at the bottom in November, going into November. November and December are bullish months. If you guys were in the group, you would know that. I'm going to start pumping a lot of educational information out. I'm getting a little bit off topic, though. Let's stay on topic here, because the topic of this is the 10-year, right? And we're going to pull up. We can't pull up Dixie, unfortunately, on this platform, but we can pull up UUP. I was about to yawn there. I got to hold my yawns back when I'm streaming here. So I'm going to go ahead and remove this since this already did it. We have a big volume gap right here. We could come down quite a bit. That could send the stock market soaring. What am I looking for? Am I going to be charting equities and all that? Yeah. But, I'd rather something that's like a no-brainer, with the same amount of gain, but with the downside very limited. Risk to reward, it's probability, right? Where's NVIDIA going to go? I'm going to buy a weekly option and just pray like all the new people do. So let's take a look at, let's do some big boy stuff here. ZROZ, right? Could pull up TLT. Right, this is 20-year treasuries. Look at this bullish divergence. Let's take a look at this on a monthly. This runs inverse of the 10-year and the US dollar. The higher interest rates go on TNX, like I showed you, the higher the yield on bonds is going to be, and the lower the face value. Can you believe this? Lifetime support. We nicked it. Guess who added? This guy. And I posted the entries in the Discord because it was such a no-brainer. But everyone's buying weekly contracts on NVIDIA and gambling on earnings. Are you out of your minds? So I'm going to be flaming and making fun of a lot of people on this YouTube. A lot, not individuals, but problems that I see, reoccurring problems that I see with retail traders. Because I run a very big Facebook group. I have been for 6 years. I've been a part of many trading groups, been subscribed to tons of them before I started my own. I know retail traders very well, and I am one myself. So I'm going to be smashing a lot of the toxic behavior that I see out of a lot of new traders. But anyways, come on, look at TLT. What runs better? What could run better? What has this is safe. This is really safe, and I like this, and I've been loading this bottom. Look at the bullish divergence, right? We broke lower, yet RSI was higher here. It was lower here when this was higher. Bullish divergence on the monthly. I'll take that. I'd love to see it at this volume shelf over here, right around 101 again. I have a pretty large position. What runs harder? We're going to go from slowest to hardest. ZROZ, Treasury strips. So these are even longer term. TLT is 20 years. This is 25 plus. Bullish divergence as well. I mean, this thing was at $203 at the peak, and you could have scooped it at 64. Is it going to go up there? No, because we're not going to cut rates that low. I see something right around here again, right? I see it right around here, 110. But $68 to 110, not bad, especially being able to sleep at night if you have a heavy position. What is something a little bit more degenerate here? TMF. This thing was 51. Really, it was around the 70s just for a day, but it's not showing it here. I remember it live. It won't really reflect that on a monthly, but here we are. You could have picked it up at around, what was the low on this thing? Let's go to a daily just to see, because I'm curious here. We got down to 384, and it hit a high of 70 bucks. Now we're at 485, but where do I see this thing? There's rot on this because it's leveraged. I could see this thing shooting up to maybe the 7s. Again, if we start cutting interest rates, I see it back up in here around 13 bucks. That could be a beautiful gain. Look at that bullish divergence on it. They all have it. But my favorite strips, they rip a bit harder, is ZROZ here, running inverse. So to go ahead and recap this video, let's pull up TNX again. Okay, the 10-year yield. So when this comes down, I remember this is inversely correlated. The chart I just showed you, it was high and it would drop low. Well, this was low when that was high, and this went high and they're low, right? They're inverse. It just goes off the Fed. Bonds don't have earnings. I don't have to worry about a nut job CEO or what their earnings report's going to be, anything, share dilution, none of that. It's kind of like gold. It's itself. I don't have to worry about that, and it runs off what the Fed's doing. There's been years where the Fed didn't do anything, so it really didn't do anything for you, and the yield sucks. You should have been in equities, in my opinion. But now, in this scenario, I've got my eyes on it, and I added almost perfectly at the bottom. They decide to cut interest rates. This is going to come soaring all the way down. I see the 10-year. They may cut it a little bit and see what happens unless something catastrophic happens. But I see the 10-year in the threes again. And I see the dollar really, really getting smoked here and coming back down quite a bit, which could send the treasuries up. So they're inversely correlated. So to sum up this video, listen to the Fed, chart the 10-year, chart the U.S. dollar. If you guys are on the big boy brokers, money sign DXY, Delta X-ray Yankee. Chart that, then chart SPY, right? Risk to reward and probability. I just showed it to you right here. The Fed is going to lower interest rates at some point, which is why I bought. I'm not telling you to buy. I'm saying that's why I bought, because it's kind of a no-brainer, right? If treasuries cease to exist, then the dollar cease to exist. So it's the risk to reward there. It's kind of boxed in a corner and has nowhere to go, in my opinion, but up. So if you guys like this content, I'm going to be posting some more content here. In the next video, I'm going to talk about the relationship to the U.S. dollar, Bitcoin, and gold. Those may be separate videos, and you guys can like and follow for more.